AP, Beijing, Tuesday's stock market activity was muted ahead of a report on U.S. inflation that traders are hoping will persuade the Federal Reserve to scale back its plans for future interest rate hikes. Tokyo and Shanghai increased. Sydney and Hong Kong retreated. Prices for oil dropped. The repeated rate increases by the Fed and other central banks to curb inflation, which is at multi-decade highs, alarm traders that they may cause a global recession. They anticipate that the report on consumer prices due out on Thursday will show a slowing in inflation, negating the need for further economic activity slowdown. The Hang Seng in Hong Kong fell 0.3% to 21,316.0, while the Shanghai Composite Index increased 0.4% to 3,170.40. Tokyo's Nikkei 225 increased by 0.7% to 26,156.22. The S&P/ASX 200 in Sydney fell 0.4% to 7,126.50, while the Kospi in Seoul was down 0.1% at 2,347.50. The Indian Sensex began trading at 60,326.71, down 0.7%. New Zealand profited when markets in Southeast Asia declined. The benchmark S&P 500 fell 0.1% to 3,982.09 on Wall Street. The Nasdaq Composite increased 0.6% to 10,635.65, while the Dow Jones Industrial Average fell 0.3% to 33,517.65. Mary Daly and Raphael Bostic, two members of the Fed's policymaking board, dashed expectations for a rate cut this year on Monday. Daly predicted that the benchmark will increase to more than 5%. It will be preserved there for a long time, according to Bostic. Forecasters anticipate that Thursday's data will indicate that December inflation decreased from November's 7.1% to 6.5%. This is significantly above the Fed's 2% target but is lower than the peak of 9.1% in June. When the reporting season opens on Friday, there are also warnings about what appear to be weak corporate profits as businesses deal with rising labor and other costs. From 131.56 yen on Monday, the dollar increased to 131.96 yen. The euro fell from $1.0750 to $1.0733.